Thank you. I will give the supervisor's perspective, but I'd like to take a kind of helicopter view, to know exactly where we are, because there are so many things going on. I must say that unless you are experts, I guess you are totally lost in the evolution. So I'd like to cover a few things, sometimes coming back to basics, and what we need as a supervisor, and then we'll further elaborate during the Q&A session, I guess. So let me just start with quite obvious things regarding the crisis. We know that we need more resilient banks and more resilient banking system, and we really believe that Basel III is a worldwide framework, is a key step forward to have a better regulation and supervision of banks. That's the key starting point. Basel III covers solvency, liquidity, leverage, and I just mentioned that liquidity is for the first time. We try to harmonize liquidity worldwide. It's a major step forward. Basel III also covers macro and micro prudential, which it's a very significant step forward. We think that the requirements are quite higher with Basel III, but it would be the cost of migrating would be mitigated by a phasing period and a long transition that was agreed. So it's also important to monitor the doing some observation periods, liquidity, leverage ratio, and so on. So this is the first block of the building block, if I may say so. We also think that we need to have a stable and efficient banking system. And for that, we need to implement Basel III as soon as possible. We need a full implementation, and I must say that the current doubts coming from the other side of the Atlantic is a bit problematic, and we are not really happy with that. In the EU, major progress are being done. It's important to have an agreement as soon as possible, to have a stable text and to avoid any significant delay. So we are very much in support of having a hopefully a political agreement in the coming days, before the end of the year. It's also important to continue regulatory work in other areas beyond solvency, liquidity, and leverage regarding resolution, but Charles mentioned and described the resolution work, which is very significant, and also on shadow banking. Why shadow banking? Let me just focus 2 minutes on shadow banking. Shadow banking is, as you know, a traditional way of complementing the classical banking business. It should not be an alternative one. We have seen, when you look at statistics, it's quite amazing to see, for instance, in the US, the amount of shadow banking which has been developing. It's even higher than in traditional banking. In EU, you also have the same trend, but it's more limited. However, we think as supervisor that shadow banking is a source of serious concerns because as such it can hide some systemic risk, and then it can lead to a contagion effect on the traditional banking sector. So we need to have a right balance between the two. This is why we think that we have, as a first step, we have to try to reduce the scope of shadow banking. And I'd like for that to take the example of my country. Sorry about that, but in my country, the definition of financial institution has been traditionally very large. It covers all finance companies in addition to banks. And we have now to live with the new European definition, which is done by provided by European regulation, and the definition is narrower. So it will lead to the risk of having some of the credit institutions outside of the scope. This is why we have decided with our authorities to keep these financial companies within the scope of supervision and regulation. It's a very important issue. And we don't want to leave all these sociétés financières outside of the scope. It is a major point for us. And we also support the work done by the G20 and the EU on the shadow banking. And let me now move to another topic, structural reform. I will not go through the Volcker, Vickers, Liikanen, you know all that by heart. Volcker is on prohibition, Vickers on ring fencing, Liikanen is proposing a more balanced way. We have in France a way under consideration, an approach under consideration. We think that one of the key points is not to put at risk the banking model, the universal banking model, which has been doing quite well during the crisis. You know, I'm always struck when I go through the Liikanen report. If you go through the different pages, it's a good description of the crisis and of the fact that there is no one model who has failed as such. And this is why this report should not lead to put at risk the universal banking model in France. So we want to keep it. It has proved its resilience in continental Europe. We also think that there are many regulatory reforms in train. So we have to ensure that these regulatory reforms are first, as a priority, put in place. Basel III, CRR, CRD4, and so on. Structural reform may complement the approach, sure, but in our view, it's not the priority of the priorities. We should have a well-designed reform on structure. They might complement potential reform, fine. We have to be careful about the implementation challenges coming from this structural reform. Last but not least, if I have one more minute, regarding banking union, well, I'm sure that we'll come back on this hot topic during our Q&A. We obviously fully support the reform. As you know, France is very much positive on this reform. We want to break this vicious circle between banks and sovereign crisis. We want to ensure right conduct of the monetary policy. We also want to protect deposit and avoid bank runs and ensure possible direct recapitalization of banks directly from the European Stability Mechanism. Key condition for an effective banking union, well, of course, there you enter in the details. We have an approach whereby all banks, the 6,000 credit institutions, should be covered by the banking union, by the this new approach. We think that it is extremely important not to create a two-tier system. That would be very damaging for the quality of the banking system in Europe. We also have to have an efficient coordination between the ECB and the national supervisors. They will be all in the same single mechanism. It's not the ECB as such, it's the single mechanism which will be in charge. However, the ECB will be extremely active and instrumental for many reasons. And we think that this banking union, this unified supervision is the first pillar, of course. It has to be followed by resolution, deposit guarantee mechanism. We should have a swift implementation without rushing, because all that are difficult and complex issues. And the first step is to have, as soon as possible, the single supervisory mechanism. Thank you.
Thank you very much.